right, today we're talking to our business owners, and as listeners, business owners have a lot of advantages that they can take when we're talking about profit, right? And so today, the topic that we want to talk about is profit first and not last, and how to strategize as a business owner to pay yourself first.
Yeah, this really is near and dear to my heart because I deal not only from a personal standpoint, but also the number of clients that I've had that have gone through this. And you can see the elements of success in a business owner. First of all, they're entrepreneurial, they have an idea, and they work incessantly hard to get that idea to market. And sometimes it's wildly successful, sometimes it's moderately successful. It does take time, but the financial aspect of what a business owner does is so critically important. And oftentimes you see somebody who receives money, all of a sudden they see an immediate success. And what do? They go out and they splurge on personal items rather than going back into the company, going back into building reserves, going back into developing retirement plans. And they make some critically bad choices that you can almost highlight that this was the start of their company. You know, I go back, there's a biblical phrase that says, build your barn first, your house comes second. And what that is reference to me is make sure your business is on solid ground, that financially it is able to withstand any kind of competition, anything that would be destructive. And that takes concentration. So don't take a one-off win and then make that think like it's the rest of your life, right?
Yeah.
Right.
I like this concept we're talking about of paying yourself first, as a business owner, because there's two pieces of that. One, we have some clients who walk in and say, I made some money, I want to buy a sports car, right? There's this side. The other side that says my business is making money and my family is still eating top ramen, and we've been doing that for years, right? There's a balance of, does the money go into the business to grow it? Does the money come out, for fun? And I think what we're trying to get to is there's a middle road of saying, how is my current self and my future self, my current business and my future business, how is it all excited about this spending, right, of what we're doing? And like you said, Randy, some of these are, making sure the money as it comes out to the individual owner, that you're being as tax efficient as you can be, that you're avoiding, and delaying taxes where you can. And some of that is in hiring years, having some good retirement plans that as a business owner, you can put away kind of extra money that just delays those taxes. And that's going to give you some, I guess, firepower to move forward. Other parts are taking a reasonable salary, to make sure business owners are not really struggling at home when their business is doing well. There's a balance there.
I was going to say, we get to talk to a lot of different types of business owners. And for the business owners who have owned many businesses or several businesses throughout their lifetime, they often tell a story of one or more that didn't do as well. A failed business or a failed idea, and maybe it wasn't the concept, and when they brought it to market, they discovered something, right? This is a common story, but what's the difference between the business owner who has withstood the failed business or the missed opportunity and those that have not? And I like where, we're starting with this there are some commonalities there. There's some wisdom that can be gained in not banking on your future self from the perspective of, I have this one-off success, I know it's going to happen again. And so you take that opportunity. Now, we love to celebrate, right? There are lots of ways that you can celebrate. But as a business owner, cash is so critical. And what you do with it when you first get your first, infusion of income or cash or profitability, like what do we do with that, both personally and to benefit the business?
Yeah, I remember Magic Johnson, this is a really interesting story. And when he became really good in the NBA, he was making very good money. And what he did is he went and talked to like Warren Buffett. He went and talked to other people in business and finance. He says, what should I do? And he sat down and listened, and they counseled him because he was getting a paycheck that was extraordinary. But at the same point in time, I want my life to continue. And he's gone on to be successful in business, probably more so than he has been when he was a player in the NBA. I've listened to other athletes who get this huge paycheck, and some are extremely brilliant and they seek advice because they know it's a one-off thing. Their success is going to be short-lived. They could have an injury. They could have any number of things happen to them. And yet they seek advice at that level to make sure that their life isn't dependent upon them continuing to perform at that high level. Anyway, again, there's story after story after story. I love to hear about people's personal account of how they overcame, how they entered in and made wise choices. In some cases, they've recovered from a bad choice, but then they've recovered and made really good choices going forward. And in business, pay yourself first is probably one of the key items. You better know what your taxes are. Don't get behind on your taxes when you first get started. I've seen so many people, all of a sudden they come to me and say, well, I owe all this in taxes. I said, yeah, you made money.
Mm-hmm.
I had one person who I thought was savvy, and he came in and told me, he says, I got all this money in my corporation, and I went to the CPA, and he says, I got to pay like $20,000 in taxes. And I looked at him and I said, you realize that's the income you earned. It comes out to you and you have to pay taxes. Just because you've left it in the corporation doesn't mean that it's sheltered there. So the IRS is not stupid. You need to know where all this is at. Now you can expense items. How you spend your money is really important. I like to make the comment to business owners, you want to use 100 cents. So where you can expense it, where it's legally feasible, you want to spend those dollars. And there's ways in which you can structure your spending so that it provides the best benefit to you. One of those, of course, is setting up retirement accounts, right?
Yep. Yep. I like what we're saying about pay yourself first, because I think some listeners might interpret that as like, go get that Ferrari, go do that thing that you've always wanted to do. But that's actually not what we're talking about at all, right?
Right.
No, not at all. Not at all.
It's interesting. And there's some clients that we've had to counsel on that side to say, you had a phenomenal year. You did great. You set aside for your taxes. You set aside for the retirement. Like you've done some really good things. And I had one this last year that she was a professional coach. And so she's a executive coach. She's in front of people on a regular basis, and made a comment like, I've not purchased, a new wardrobe in a long time, or some new pieces. And it was like, that's part of your job. Like that's part of how you present yourself. That's, in my mind, that's a business expense. Like you should spend some money on that. And it was a good freedom of being able to help her walk through, like, where is this a spend that is luxurious and extra and maybe something you should avoid? And where is it something that is building you into what your business is doing, what you are doing? We see both. We see the same discussion actually in retirement as well. People who are good at saving have a hard time transitioning, and business owners who are builders, they have a hard time making sure that they are not just building the product and the service, but building solid into the future.
Yeah. And I think, when you're so focused on growing a company, there's a lot coming at you at one time. And most often you're trying to keep up, right? And you maybe don't quite have enough of the revenue to start hiring for certain positions. And so we find a lot of entrepreneurs wearing multiple hats. And something as simple as trying to organize their business expenses from their personal expenses becomes overwhelming. They don't have a bookkeeper. It's hard to keep up, right? A lot of the times the roadmap that we lay out for business owners is just clear organization from the beginning, right? So we've got whatever the entity structure is, right? And you need a separate business account related to that. And you probably need a credit card related to your company so that you can easily track the transactions that you're going to categorize as a business expense versus a personal expense. And let's talk about retirement funds. When we talk about paying yourself first, we're actually talking about paying yourself now, but
Laura,
for your
I'm
future
25
benefit.
years old. Why should I worry about retirement? I should just spend
Right,
it while
exactly.
I got it,
I'm going
right?
to live for, I'm going to,
Yeah.
oh.
No, that's right. And I think there's moments where, as people walk into these years where they're building towards retirement, sooner is better. It just is. And, the sooner people can start getting into these plans, even if it's not a massive amount, it's just a start and a habit that turns into, at some point down the road, they realize they're maxing out their retirement plans. They're building a future. And the joy of that is when you see, walking with an entrepreneur who does one or multiple businesses over time and is consistent in getting those tax benefits, putting into retirement, to where they get to a point where they become financially independent. So, they could sell the business and have a great exit, or they could also just retire, and it gives them this flexibility. And I see this a lot. I mean, we all do, but I've seen a number of times where someone is looking to transition a business to the next generation, to their kids and to their family. And sometimes that founding business owner has built up their own reserves, and they're able to decide, do we want to gift this? Do you want to sell it over a long period of time? Like, there's a lot of options and flexibility. We've seen others where they come in and say, if I don't get a paycheck for X amount of dollars for tomorrow and for the rest of my life, I'm going to be in personal financial issues. And it puts that next generation in a really difficult spot that there's no negotiating flexibility. They just got to pay the founder constantly, and it's a big pull in the company. So I even think for people who aren't looking for exits or are not looking for, this is just flipping the business, that they all the more, need to make sure they're building up their retirement. They're taking advantage of these things. So when they get to a point that they're considering retirement, they've got so many options and freedom and flexibility. It adds so much more value to that next season of life.
Right. Organize your paycheck. We talked about organizing different bank accounts so that you're structured to track the expenses and the income for your new business, or maybe it's an existing business, but how do you organize the money coming into your household personally, right? And so for those who just see the gross sum and start to get teased by something that they've always wanted or been waiting for, right? Like, hold on, we will get there. But let's take a minute and make sure that we have a solid emergency fund built up. And as business owners, we typically recommend that even in their personal savings account, they have a higher buffer, because there's just added liability as a business owner, especially if you have any sort of staff, right? So let's pay yourself first in that way too. You've got a good amount of cash, safety and security that you can kind of estimate, typically 3 to 6 months, right? Reoccurring expenses.
Yeah, for business owners, it's probably going to be higher, right? I mean, you're going to want to build up, because things happen to a business owner that's different than somebody who is just an individual who's an employee and such as that. Everybody can have events that can really cause their financial life to be turned upside down. But business owners in particular, and you have a responsibility not just to yourself, but to your employees. So you need to look at your obligation and the people that are committed to work for you. How do you structure your life so that you can benefit them also at the same time? That to me is so overlooked. We talk to business owners all the time and say, well, how do I benefit myself in my retirement plan, but pay the least to my employees? There should be a reverse of that. What is a reasonable income and benefit that your employees should have, and how do you structure the reward as they grow it and they continue to stay with you over years? And it's just an interesting concept. No, I don't want to pay them. I want to pay myself first. I'm going, stop. If you build a base of employees that are faithful and loyal to you, you're going to have success going forward, and they're going to be there through good times and bad times. And it's really important is how you look at people, because people are really critical, and how you treat people is also a reflection of your character. Anyway, I could go off on that from a philosophical standpoint, but building a cash reserve is so critically important. You want to make sure that your business is on sound footing. And there's always, when you go down through the line item, that's where having good accounting is so important. You go down through the line item, how much you should pay for all these expenses. And there's a percentage. You can see when you go through a balance sheet or a profit and loss, some things are out of line. And if you're spending money in a particular area, well, what's the reward of that? For example, if this is a cost factor, then what does that cost do for you as far as reward? And new business entrepreneurs, it's so difficult for them to get a handle. That's where a mentor, that they're working with, and like-kind business or something like that, can really provide insight. Going back to my comment regarding Magic Johnson and talking with Warren Buffett early on, it's an amazing gift that you get from talking with people at that level.
Yeah, get good counsel, right? As a business owner, your taxes don't have to be a surprise. Create a relationship with a CPA or your financial advisor who meets with your CPA on a regular basis so you can anticipate some of those taxes. And if it's a year of extremely high income, what can you do to try to mitigate some of that tax liability? If you're charitably minded, how are you giving back to your community? How are you giving back to your client base that you serve? Are there other ways that you're charitably minded? Let's do some organized planned giving over time, and that can help, right? So there's some strategy involved when we talk about taxes. And this again goes back to that retirement account funding as well. There's benefit there too.
Right. So I have a non-popular but useful for anyone who's an entrepreneur. July and August, end of summer, vacations, you're thinking about transitions. It's a good moment to do a mid-year tax review. I want to throw up when I say it, right? It's a tough, you don't feel like it, but man.
It wasn't on my list.
That's right. You're halfway through your sales, right? You have a better sense of what your revenue has been. You have a better sense of what the market's doing this year. Man, what a great moment to finish your, basically June 30th, finish your books, take a look at them, and then project for the rest of the year. If people were to do that and then reassess their tax contributions they're making, Say, hey, I've already put in some, most business owners are paying quarterlies. You've already paid 2 quarterlies. This is where I thought I'd be. And you do it in July or August, and you look back what you've paid, look forward what you project. You could save so much pain by doing that there, because we've had a number of clients that you get to the end of the year, you're in December, there's not a whole lot left you can do, and you realize you are so far behind that you have not paid enough taxes, and you were in the midst of still trying to hit those end of year goals. You're still celebrating that our sales are going great, and not realizing that your tax liability, you're falling behind. The years of growth are the hardest for this. And Randy, we've talked about this at length before, but you've experienced this as well. As businesses are growing, the cash, you want to use it for all sorts of fun stuff, growth stuff. Let's do more marketing, let's do this. But those taxes, they always come due. And so to make sure it's a good cycle. But so not popular, not fun, but July and August is a really good moment just to check in on your taxes.
Going back to one of the comments before, you don't want to live in such a way that you can't enjoy the fruits of your labor. So if you're doing really well, the question is, if you have this pot of money that's resulted from your work, remember that pot can disappear pretty quickly. So spending some of it and enjoying it, going on a vacation with your family or buying a vehicle that you've always enjoyed or whatever toy that you think, just limit it. Limit it to a certain dollar amount or a certain percentage of your gross income. Don't overspend, because have you checked off all the other boxes? And I would say one of the biggest boxes that most people don't check off is taxes that are due. They make all this income, and then all of a sudden, IRS comes knocking on the door and saying, you owe me. And you don't. Right. I had one client who received money. This has been decades ago, and he sold a business, and he said, "Well, I'm going to hold off," because he had to pay taxes on the sale of that. And I said, "Okay, but let's set aside it was a substantial amount of tax, about $75,000. He took that $75,000 and invested in another business. When the taxes came due, he had like 9 months in which to pay the taxes. He had lost his down. He didn't have the $75,000. It literally ruined his life for the next 10 years, because that compounded, that went through to, IRS put penalties and interest. So that $75,000 turned in more like $300,000.
My word.
And they literally came and put a lock on the door of his business and threatened to sell his business and liquidate. I tell you what, It was hard walking through that. I said, let's take that $75,000. Let's put it over here in the bank. You don't have to pay it right away. You can some interest on it. But when it's due, you've got the money to pay the bill. And I just went, are you kidding me? And yeah, it's just hard to see that kind of repercussions for not planning and having expectations of what that cost is going to be.
Right. And plan ahead,
lay out. It's a real interesting dilemma that people get themselves in.
Yeah. Plan ahead. As a business owner, you're planning your business. You're thinking about growth. You're thinking about market strategy. You're thinking about how to optimize productivity. You're thinking about so many things. Plan ahead to have a regular meeting with your financial advisor. Plan ahead to have a twice-a-year meeting with a CPA. Just put it on your calendar. Don't think about it. They know to expect seeing you in July. They've got the work or whatever they need to do ahead of time. But just put it on your calendar, because you'll thank yourself later, because those surprises aren't pleasant. And you think about the reputation that business owner had to preserve. You think about personally what it means, right, to come back and share that loss with his family. Like, it's just the implications are just too big.
Yeah, they really are.
That's great. Yep. So as we move forward, there's taxes, not a fun one. There's emergency funds, also not a fun one, but so useful. The one that I think is great, and we just, some of our clients, as they build up these savings, emergency funds, investment accounts, there's opportunities for clients of ours, clients of other companies to utilize some of those funds to do the things they need to do, basically become their own bank. And we've had a number of clients, entrepreneurs, they have an exit, so they get a couple $1 million, they set that aside. Rather than having to use that money for the next venture, they've been able to, in essence, borrow against that money, let the money still grow in the bank while it's invested, and then utilize some of it for the next venture, whatever it may be. It's risk, and they're taking on risk. They understand the risk, but there's more sophisticated ways to utilize some of these proceeds as you're building a business that still give you an exit plan. Because worst case, they're able to use that store of value to exit everything if they had to. And there's a real wisdom, I think, in setting things up in a sophisticated way to best utilize your assets for where you're trying to get to. And some of these things entrepreneurs know. I think there's a big dynamic with entrepreneurs. They're great at their industry. They're great at hustling. They're great at being gritty. They're great at hiring people. They're great at leading teams. They're not always great at personal finance. And I think rather than feel like they have to learn it all, which is an entrepreneur's normal rhythm, but rather to say, who do I need in my life that's going to supercharge this part of my life so that I, as the entrepreneur, can use my superpower and maximize this part of my life. And
Right.
it's the who in that relationship. And financial advisors, I tell people on a regular basis, if you just need someone to babysit your money, yeah, there's a lot of financial advisors that can do that. But if you need a thought partner, if you need someone who's going to build, strategic ideas and strategic thoughts that are going to help you build your future, that's when you have a sophisticated advisor that's really adding value to your life. So whoever, if you're in the entrepreneur space specifically and you don't have that, it's time to start looking around because it's out there. You don't have to do this alone.
Mm-hmm. And I think there's several entrepreneurs or business owners out there that might even say, hey, I'm actually pretty good at personal finance. Like I've been good up until this point. And I think that when it comes time for you to be focused on a new project or a new entity, there's also a reason to hire that person that can manage that for you, not just to have a fellow thought partner, but it's because your time is more valuable growing the business.
And
so who do you need on your team?
Right. And this is what we do for our clients. When I talk to people, they think, okay, wealth management, financial planner, you want to sell me some investments. I'm going, that is very little of what we do. I mean, we don't talk about investments, probably very little. What we do is talk about the setup, the management, the cash flows, all the things that are critically important. We become, I like your comment, become your thought partner. Let's think it through together. What is it that you need to do to be successful next year and beyond, right? This is really important to have all that information at your fingertips, so to speak.
Yep, absolutely. Well, I hope to our listeners that some of this was helpful, and maybe it was like, a little bit of medicine that we all had to swallow, but I think we added a little bit of sugar. So a spoonful of sugar helps the medicine go down. But yeah, and truly, this is good wisdom for the business owner, both now, somebody who's expecting to be a business owner, for one that's owned multiple businesses, but just wants to do it differently this time. So if you need a team, reach out to us at Trey Court Advisors. We'd love to get to know your story and to help you.
Until next week, folks. May you grow in wisdom and knowledge. Thank you for listening.
We have a few more things to let you know about before we go. Podcast reviews really help us to serve more people and get this information into the hands of the people who need it. Please leave us a review. Even if it's not 5 stars, we welcome the feedback.
And we invite you to let us know what topics you would like to hear more about or what would benefit the people in your life who you're closest to. We have more resources online. Those resources are designed to help you share this great information easily with people in your life. To access those resources, please visit tricourtadvisors.com.
Often we hear from clients that they wish they had talked to us sooner. If that's you, we'd be thrilled to see how financial planning can benefit your life. Email us at contact@tricourtadvisors.com or simply click on the link in the show notes.
This show was produced by Graham Gardner at Model FA. Find out more about how to create a podcast for your financial planning business by visiting modelfa.com. We love creating content that's useful, resourceful, and maybe even a little entertaining. We want to make this mega universe of financial topics and advice applicable and helpful to your life.
Remember, at Trey Court Advisors, we are your future's best ally.